Let's get some more details on what to expect from the local market today. Chris Weston joins us from IG Markets in Melbourne. Good morning, Chris. Good to see you. Just firstly, yeah, it's a tough one, isn't it, given that we didn't have any US lead. What do you think we'll see at the open for our market?
Well, I mean, all the anecdotal evidence is we're going to see very modest losses, to be honest. You know, the SPI was, as we know, shut at midnight, so there's nothing to go off there. But the US futures did reopen this morning at 8 o'clock, and if you compare where the S&P futures are right now in comparison to where we closed the equity cash market at 4 o'clock last night, S&P futures are down about 0.2%, Dow futures are down about 16 points or so. SPI tends to track the S&P overnight, so you'd imagine, all things being considered, that the SPI futures probably would be down a marginal amount. You can look at the correlation between our equity markets and the Aussie dollar and Aussie yen, and they're down about 15-20 points or so from the cash close as well. You can look at European markets. Okay, you can look at the FTSE, which had, I think, the third lowest volume of the year, and about 45% of the sort of average turnover with this year. That was unchanged, down 3 points, as with a CAC. DAX was down about 13 points, but at the same time, I mean, that index has had an 8% rally in the previous 3 sessions, up nearly 12% or so since early June. So clearly that was a chance for a reprieve. You know, there were some positives out of Europe and there were some negatives out of Europe. You can look at Angela Merkel. A new poll came out post-summit and said that her ratings, her approval ratings, have picked up a little bit, which is very interesting given the slating she's been giving in the domestic press. Merkel and Monti had a meeting last night, and they appeared to be getting on very well. You know, they appear to put their differences about Euro bonds behind them. They're saying, you know, how well they're sort of coming, and their cohesion coming through. You can look at what we're really seeing in Europe as well in terms of the data. I think this was the big highlight that the journalists or the newspapers are putting out this morning, is the UK PMIs were a touch softer than what was expected, and that perhaps may play into the Bank of England's call tonight for asset purchases. It's still in expansionary territory, but lower than expected. And then you had the German service numbers, which actually surprisingly went into contractionary territory, and again, that may play into the ECB's thinking last night. And I think Euro and sterling both had quite meaningful moves last night. Sterling more so, had about a 100-point drop from our cash close, probably more to do with the LIBOR scandal as well, which seems to be plaguing their markets as well. So sterling and Euro had a big move down. Aussie's down a touch. Everything points to marginal weakness on our market this morning, but nothing really to get too worried about.
So I guess the big event risk then is going to be whatever the ECB decides tonight, with sort of expectations that we will see a 25 basis point cut?
Well, that's right. I mean, I think you've got this kind of dichotomy playing out, this divergence now between expectations and what the analysts are calling for. Yesterday, I was highlighting to a few clients the divergence between what the Riksbank were doing, the Swedish National Bank, where pretty much it was major consensus that we were going to get rates being kept on hold by the Swedish Central Bank, but the credit markets were pricing in a near 50% probability of a cut. Now, we were suggesting people should look to buy the Swedish krona, obviously look to sell Euro Swedish, Sterling Swedish, and as a result, we've seen quite a material move down given what was priced in. The same thing could be said tonight about what we're seeing in Europe. You can look at Euro Aussie, for example, which has had a major move down. It's about 860 pips in the last 33 days. So it has been very one-sided action. A lot of that has to be down to the weakness we've seen in the Eurozone. But I think if you look at what's being called for tonight, the credit markets are pricing, or the OS market's pricing in a 45% chance of a cut. So there's still a good chance they're saying that the ECB could be keeping rates on hold. Whereas out of 62 economists, they're saying 75% of them are saying that we're going to see a 25 basis point cut. 5 of them are calling for more than that, 50 basis point cut. There's obviously going to be a change to the deposit rate as well as the refinancing rate if we do see that. So there's going to be volatility, I think, in the Euro side of things, because expectations are all over the place there. I think that's going to be a really interesting one. If we do see a 50 basis point cut, look for a big move down in Euro. Some people have actually been saying to me, look, if we do see a cut, it could actually be really good for the Euro, because it sort of feeds into the idea of growth, and then you get the risk on side of things. I just look back at November and I look back at December when we saw previous cuts by the ECB, and we actually saw quite a big move down in Euro, dollar and against the crosses there. So that may play out. Last time in December we saw a nice move down about 120 pips and then a rally towards the back end of the session. I also think you've got to look at the Bank of England. The Bank of England, there's a good chance they're going to do $75 billion worth of asset purchases. I think that would be good for sterling. I think, you know, whilst it's dilutionary in effect, I think the markets will rejoice at the potential growth that comes through there. And I think the other thing you've got to look at is the Spanish bond auction tonight. They're coming out and auctioning around $3 billion or euros of 3, 4 and 10 year bonds. not a huge amount of money by any means at all, but borrowing costs have increased since the last time they came to the bond market, I think back on the 7th of June. And if we do see a really poor bid to cover there, which we don't expect, then you could see some big pressure on some of the risk assets as well. So that's something that you need to bear in mind as well.
Really interesting story on the front page of the Financial Review today, talking about perhaps the government, Australia, trying to position itself to become the third country allowed to directly convert its currency to the yuan. So basically not having to convert it to US dollar before converting to yuan. Really interesting this in the fact that it could see new competitive products, possibly people looking to go out and trade yuan forex currency there. Do you think that that's something that we could see?
Well, I mean, this came alight recently when the Chinese and the Japanese came together, and they started offering Japanese yen against the renminbi as well, and that got quite a lot of press coverage, and people speculated who could be next. There was talk that Australia could be the next country. There was talk that perhaps Britain could be the next country. It's about China coming out and looking to diversify its reserves, as they're trying to get rid of its dollar reserves to about 30 to use it to going forward. I think that's the idea, but it's about companies in Australia. If it does transpire that we are going to have this stronger relationship with China and allowed to be able to convert Australian dollars into renminbi direct, rather than going through this sort of cross side of things, going through US dollars, which effectively makes it a lot cheaper for Australians to do business in China. It makes it a lot easier and a lot cheaper for Chinese companies to want Australian products as well. It's about bilateral agreements, it's about bilateral trade, and it's about making that relationship much higher. I mean, that's the longer term situation. It hasn't been agreed upon yet. Wayne Swan seems to be trying to get the credit for this one, and you've seen that in the his picture in the Fin review today. But this is a long-term project. It's not going to be a short-term issue. Fortescue were the first company. They came out the other day with a renminbi product as well. So I think that sort of set the ball rolling. It's a long-term situation. It's about the liberalisation, I suppose, of the Chinese currency, and it's a bigger picture here as well. Some people are saying, is this the end to the US dollar as a reserve currency? Well, clearly this is not going to happen overnight. The US dollar will remain the reserve currency for a long time, but it's about closer ties between Australia and China, which really should be celebrated longer term. But is it going to happen overnight? Probably not. I think in terms of actually freely trading this as a speculative investment, we've started offering. We're going to be offering to clients the Japanese yen against the renminbi. Whether or not we start offering the Aussie dollar one is being debated at the moment. There's not a huge amount of appetite for it in the investment banks at the moment, and the product's still a long way from the investment banks being allowed to use it, let alone any sort of on the retail side. But I think this is something that it's got demanded the front pages of the Fin, and it's about Australia and China having closer ties longer term.
Chris, great to get your analysis as always. Thank you so much. We'll talk to you throughout the day.